How you doing, everyone? Husky, what up? How are you, man? Good day for me. Nothing too exciting. Caught a bounce and didn't get really any of the sell off myself. But what about you? You have a good day? Deal, man. It was a sweet one if you're on the right side of it for sure. Big sell. Big sell. Ricky, how you doing? Waiting on coin. Probably did a ripper. Wow. Giving some of it back, huh? Cool. What a day to get in on that thing, huh? Did you swing long on it? Nice long swing. That was up nice for a second there, huh? Nice. Yeah, I was watching yesterday, watching that breakout, uh, not only of the trend, but of this range that it's been in. I guess I should get these, but out of this range that we've been in, and almost swung long on it yesterday, and was overall pretty dang happy I didn't make that choice in the end. Was on that push in the pre-market, I probably would have said I'll let that first candle play out, and that first candle would have been a $8 dump in my face. Nah, these are just a different, they're a different kind of candle. It's called a bar chart. Um, I had somebody messaging me today and they were talking about how they, get stressed out by the candles. And I was like, well, have you ever tried a bar chart? And then sent it to him. And the lack of the big body, can really help people control their emotions a little bit. Like as weird as it is, just, seeing something different is helpful. And so all these they're the same as a candle. The top line up here that points left is where the candle opened. Down here is where the candle closed, low a day, high a day, whatever it is. So they can do, for some people, if you get a little worried, just having these kinds of things trading, it can not seeing big red and green candles can be a little helpful for you. But no, we'll turn those off here in just a second. These are what were these were what were really popular through like the, you know, 80s, 90s. People like the bar charts. Welcome everybody. How we doing? Hope we all had a good day today. The 120 EMA. I don't use the hourly 20 EMA. Yes, I mean we will, of course. That's the last one we cover, but oh yeah, that's my favorite thing. Yeah, it's great. It's great for anybody on Thinkorswim. It's a real nice thing to have. And it's just something that I use, and we'll talk about it in a later lecture, but it's something that I use a lot for uh bias on the day. It's a real good one for bias on the day. If you're above that hourly 20 in VWAP, that's a great combo to say, look to buy dips or look to short rips. Yeah, we'll just give it a few more minutes. Group is pretty quiet today. I was wondering if class might be a little quiet. We'll see how it plays out for us, but welcome. Gonna be for anybody that doesn't know, these next few classes and the last class from me, it's gonna kind of be covering, everything that I look for when I trade. And the idea of it is that, we'll be able to uh uh get all of my lectures in my tab pinned in a row, so that they'll be easy access if you ever want to go back and listen to something I said, or tell me I'm doing something that I said don't do, any of those things. They will be pinned in the tab, easy to find. And then I'm trying to do them in a specific order of, things that I look at, things that I use, every day. And then kind of leading into the more, I don't want to say advanced stuff, but leading into like price action, and then leading into trading ranges, trading in trends, all of that kind of stuff. And so what we'll do is, the last one was support and resistance. Next thing we're going to do is EMAs, SMAs. And when people ask me about EMAs and SMAs, and we'll of course get more into this, I always just describe them as like they're just support and resistance lines that adjust. Think of them that way. That's like, that's how you need to think about EMAs, more than thinking about breaking through EMAs. Think about rejections or bounces at EMAs is always a better way to look at them, in my opinion. And same as how we treat support and resistance. You want to assume support and resistances aren't going to break until they do break, because you can end up getting caught in some pretty vicious bounces, and that's the same as the EMAs and SMAs. So tonight, I'm just going to be covering the EMAs and SMAs that I like to use, the ones that I've found over the years that work pretty good, or at least work pretty good for me. And then give me 1 second. The ones that work good for me, the ones that I like, we're going to be covering some that I focus on more for intraday trading stuff, as well as longer term stuff. Whether it's just how I'm going to, looking at longer time frames, maybe the daily or the weekly or whatever it is, seeing if we're at any of those major SMAs or EMAs, and then kind of use that for my intraday stuff, all the way down to some combos that I personally like for things like the 1 hour, the 4 hour, and specifically swing trading more. Things that can, maybe help you identify a change of momentum, change of trend. And then if you are in a swing trade, a couple of these combos can be really, really nice ones to say, do I want to stick it out in this swing trade? As most of you know, I always think booking your profits and looking for re-entry is going to be the best thing, as opposed to let things going, green to red sort of deal. But some people are unable to watch their trades all the time. Maybe they work or they do those kinds of things. So, maybe you want to check your phone or check your computer a couple times a day to see what a stock is doing. And then if you have some of these longer time frame EMAs, you can just very quickly glance at the chart and say, if I'm short, are we still below these EMAs? Yes, no. And do I stay in the trade or not stay in the trade? So it can just be a nice cut and dry way of thinking about those things. And so with that, I think we're going to get started. As I said earlier, welcome everybody. Dirty River, happy to have you here. Talking EMAs and SMAs. class number 2 in the little series that I'm doing. I think there'll be 7 or 8 of them. So thank you for being here. Small crowd tonight, so we will hopefully be able to answer any questions. Maybe I will be able to keep up with the chat for once. Doubtful, but we'll see. And with that, we're gonna get going. Oh, I see I'm already missing things. Right on, Gail. Happy to have you. Let me know if you got any questions. EMAs are pretty nice, simple thing as long as you trade them correctly. With that, we'll get going. Oh, have I done a lecture on trend lines? I have, and we're gonna do one here again. I don't remember what the exact schedule is, but sometime over the next couple of weeks, we'll be going over, drawing and trading around trends. And so first thing we're going to start with tonight, as many of you know, for anybody that comes to my lectures or comes to my classes, most of my technical analysis is done on longer time frames. Yes, I scalp trades on the 5-minute, but a bunch of my levels, a bunch of my areas of concern or areas of big support, big resistance, any of those things, I'm finding all of that on longer time frames, mostly the daily and the weekly. I'm not going to say you shouldn't look at the monthly, but monthly candles, you really only want to look at them when a new month starts, so you can just kind of see where the last month opened and closed. Are we still within it? Those kinds of things. And those monthly candles can provide really nice breakouts, but you always just want to be cautious analyzing a candle that hasn't formed yet, especially, right now we got a really volatile market. We had some nice 4-hour candles leading into today that very rapidly, we were looking good going into the open and then ended up having some real ugly candles. So you always want to be careful analyzing a daily candle or anything like that before it has closed. We've all seen days where the market dies and then ends up going green, or days like today where the market goes on an absolute ripper, $5 up or whatever it was from the close, $6 up to closing almost 1% red. So you always want to be careful looking at those daily candles. But I still always start analysis on the time frame or the daily time frame. And one of the main study sets that I use on these are the SMAs. And it's a simple moving average. That's what SMA stands for. And so it's, the math on it is simple. For example, the ones that I use, this dark blue one, 20 SMA, light blue, 50 SMA, kind of pinkish reddish color, is the 200 SMA. And that's honestly the most common SMA sets you're going to find. There are people who run the 100 because frequently there can be a pretty big gap between the 50 and the 200, as there should be. So you can kind of run the 100 for, if we're selling below those, you can find a nice middle ground SMA to trade around. To me, the SMAs are crucial. They will frequently act as big support or big resistance. And when you do finally break through them, you normally get a pretty nice volatile move. Just to go back, here's an example, broke below the 20. Within 2 days, we're breaking below the 50 after holding down here for a couple of days, with a really big sell followed by more selling. That's typically how breaks of SMAs go. It also works on the other side. Maybe you'll kind of be pushing up towards them with some failures. And then when you finally are able to break it above them, you'll frequently put in a pretty nice move to the upside. So they work both ways. And what I always tell people is, if you're trading the market and maybe you don't have like an awesome time on support and resistance yet, you're still kind of practicing that to learn, what you want to do. One of the first things that I'm always going to recommend to people that are just learning is pull up these long time frame SMAs and look at those levels. And if the market is ever trading around those SMAs, then use them. They're going to be, at least in my opinion, they're going to be the strongest things on the chart. For anybody who doesn't know what an SMA represents, just as an example, 20 SMA, it's my dark blue line. This shows the average price of people buying, and we're looking at SPY for this example, of people buying SPY shares. So we can see that as long as it is above this line, that means everybody who bought shares in the previous 20 days, that's what the 20 represents, is now green on that position. Same as if we are below these SMAs, everybody in the last 20 days who has bought shares is red on their position. So that's what these represent. And that's why when you see a break of them, you will frequently see a volatile move, because when it breaks, we now know that the bulls are underwater. The bulls are losing money. So when that officially happens, everybody who's bought SPY shares in the last 50 days or whatever is now red on their position. That is when that's on average. That's what the simple moving average is. When that happens, that's typically when bulls are going to give up and start selling. So you can see continued selling. Same on this side, where the bears were winning. When we finally break above it, that is where bears will frequently give up and we can continue buying. So that's why I love the SMAs. A lot of people will try to tell you, same as the EMAs, that, hedge funds and things don't use SMAs. And that's exactly right, because they're literally the volume that makes these SMAs end up where they are. So they don't need to use an SMA. So for us, we get to look at them and basically say to ourselves, big money is making money or big money is losing money, and we can kind of trade around that. There'll frequently be big bounce points, big rejection points. We can go back to some of these other breaks where we start to go sideways, see some big selling, and it acts as resistance, strong resistance, and then support for a few days. So always, always, always look at these 20, 50, 200 SMAs. For me, they will frequently be the most important, levels on the chart. As most of you guys know, I like to trade. I trade bounces and rejections more than I trade breakouts. I like range trading. And so I typically assume they won't break until they do break. That's what works best for me. And so that is another thing that they're really, really great at, is identifying the trend. If all three of the SMAs are pointed up and to the right, chances are the trend is up. If all three of the SMAs are pointed down to the right, chances are the trend is down. So you want to be looking to buy dips if they're pointed up like this. And we can see, and again, I'm not saying hedge funds are following this, but we can see that over this last, 4 months, and we're going to look at another one that was honestly just as good, if not better than this. If you just bought the dips to this 20 SMA, you went 4 out of 5 on your trades and made some really, really nice money doing it. So they can just be a wonderful example of looking at trend. It's one of those ones where today we had a big sell. We broke the weekly, little range that we were in for a second. We're ultimately brought back up. But people see this kind of candle and still say to themselves, this is the end, the market's going to die now. And for me, I'm not saying we go visit this 518 or this 515 or anything like that, but as long as we're above these SMAs, I'm still looking to buy dips on things. I'm not telling you to see a big red candle and buy calls just because, but I'll still be looking to buy dips as long as all of these SMAs are telling us that the trend is up. And so that's, that is they're very simple, very easy things to trade around. You can of course play crossovers, but because they're kind of slow due to the math, you won't pick things up, trade or changes of trend very quickly. Even this one down here, by the time we were getting the SMA cross, the market had already bounced, $50, $40, whatever it was. So you're a little late to be chasing the crossover. But once that happens, start using it as, support for a trend or anything like that. You can also use them in range trading, but it's not the recommended for SMAs. So that's the SMAs. Hopefully no questions on those. Pretty simple, really just use them to identify trends in the market. And then if we're trading around them, make sure you are thinking of them as either, strong support if we're above them or strong resistance if we're below them. So next one we're going to go to is, I would argue likely the most common EMA, SMA, any of those sets that anybody uses. Do I use the Ripster clouds? Absolutely not. I'm personally opposed to that guy. But if you want a cool cloud, EMA cloud, we got a member in here, Assassin. He's who made my volume study. He's made me a bunch of things, EMA crossover studies. He has a cloud study, ribbon, whatever you want to call it, that is amazing. we can actually, Gail, will you remind me at the end of this? And I really should be including that. I really should be including that in here. Because like his clouds, he's so good at it. He's so good at it. And you can change, the length that you like. If it's 60, then you're that's showing you that is like based on 1 minute charts. So you can change the length of it. You can change, I mean, this thing is amazing. So let's actually talk about that. If you wouldn't mind trying to remind me if I don't remember. Let's talk about that at the end. Okay, but for this, as I was saying, this is, in my opinion, likely the most common EMA set everybody uses. A lot of people take note of these. Day traders use it. Long time frame traders use it. This EMA set works very well on basically every time frame. But the most common places you hear about it are for the day traders, because you're using three. And so what these three are the 9, the 20, and the 50. A lot of people will use the 21. I've always used the 20. So I just have it. I just use the 20. It's the difference of one candle. So it's not going to be a huge difference if you pull up the 20 or the 20 or the 20 or the 21. But I've always liked the 9, the 20, and the 50. And so what do we use these and how do we use these? Because people, a lot of us trade with them. I trade with them. I know Matt Flips trades with them a bunch. I'm sure Empanada uses them. 1K uses them. Toasty, when he's day trading, uses them. I mean, everybody in here likely uses these EMA combos at some point. And so I want to talk a little bit about EMAs in comparison to the SMAs. So as I said, the math on the SMAs is super simple. You take, if it's a 20 SMA, you take the previous 20 candles closes, add them together, divide by 20. It's really just a simple average. The EMA math, I cannot even begin to tell you. There's letters, there's numbers, and I can't do the math myself. What all of that math is doing is actually taking a little bit of the volatility and recent price action into account. So when we look at a 9 EMA, yes, it is analyzing, for the 9 EMA right here, it is analyzing up to 9 candles back, wherever that is. For this candle, it's 9 candles back. So it changes a bit more rapidly because the math is putting the weight on these candles. So that's why we see this strong downtrend. And then within 2 candles, this thing was kind of kinking up because it's focusing more on these than it is on these. And then 20, a little bit less, like where the 9 was kinking up, the 20 was still pointed down. So that's taking the previous 20 candles, but putting the extra weight on those closer, more recent candles. So how do you use these? And what are, things, what are things that people look for to trade around them? And so I'm going to start with the bigger numbers first. As I said, 50 SMA or 50 EMA. That's the common long period one that people talk about. And the best way, and I won't say the best way, but the way that I always describe the 50 is that it is telling you your strongest trend. Or it's telling you if you're chopped, whatever it may be. But if the 50 EMA is pointed down, you are trending down. And you are not trending up until you have broken above it. And that thing has started really curling up. As we can see with the 9 and the 20, that's telling us people in the last 45 minutes and people in the last 100 minutes, are they making money or losing money if they're long? That's what it's telling us. This one is telling us in the last, 250 minutes, 4 hours, just over 4 hours, how are people doing? So you can assume that 50 is always going to be very strong. It can be a great place to look for rejections as we got today, or bounces if we're coming down to it from above. So it is telling you the trend. The 20 EMA is also telling you the trend, but in a shorter view. So while we know the 50 is strong and you don't necessarily want to be getting long here, you can look for bounces here because we're breaking above the 20. So you can look for it to track to the 50 if there is enough reward there. But you don't want to start buying calls when you're right up here pushing on the 50. But sometimes you get that breakout, and the 20 is going to be the thing that breaks before the 50 does. So it's when you can start watching for a reversal of trend, is the break of the 20. The 50 is where it's actually happening. Again, break above a 50 with retest is a great entry long. Push up into, or sell down into the 50, break below it with retest, great entry short, which is technically what happened today. Sell below it, took a few hours, first push up into it, should likely be shorted. And that is because, as with all things, most breakouts fail, most breakdowns fail. So when we've broken down, if we break above the 50, we are now looking at a breakout. So we want to assume that's going to fail. We want to assume that next attempt is going to fail. Obviously, today worked in spectacular fashion. It won't always be like that, but the 20 is your first sign of reversal. Now, the 9 breaks a lot more with many fake outs. We can even see a couple today, try to break out failure, try to break out, almost looks like a failure, ultimately fails, but it will be rife with fake outs. So how I personally use the EMA, and we're talking downside today because we had downside today. We might zoom back and look at a couple other things. But I am going to, if we break the 9, because I assume most breakouts fail, the next push up into the 9, I am always going to take the same direction of the trend trade. We sell down. This is an extremely reasonable short entry. Obviously, it would have been a quick scalp, but you're getting a buck flush on this thing, plus, and a couple of candles. Great scalp. You can try again. However, when we start to have a few attempts, you don't necessarily want to short this big old breakout candle. You want to try these first couple attempts and trade with the trend. When, the statistic that I always share from Al Brooks, 80% of breakouts fail. So we had a test here, we had a test here, we had a test here, and then we had a, failure here. That's 4 attempts. So this one is the 5th attempt. On the 80% statistic, this is the one that might break out. So you don't, if you're trying to short the 4th, 5th, 6th attempt, you're chasing at that point. Again, here, we get a breakdown. You want to short the bounce into it. First attempt. You want to short the second attempt. Down here, you don't want to be shortening the hole. Did it end up working and you get a dollar flush? Yes. But this is a chase down here. Up here, nice and reasonable, stop simply right above it or above the 20, very tight stop on that kind of trade. So that's how I use the 9 EMA. Rarely do I care about the 9 EMA, breaking. I'm not going to take it just because the 9 EMA broke. I'm going to take, I'm going to be more concerned or, happy, whatever it is, whatever way I'm trading with the 20 or 50 breaking than I am with the 9. The 9 for me, it breaks, it fails, I don't know. We'll see if we've had some others. Like here's a prime example. Trending markets were holding it, breaking it, going back over it, breaking below it. Nice sell, break above it, really make no money on these kinds of things. These EMAs best used in trending markets because you can just get, a lot of people like to trade the crossovers, which we're going to get into next. And sideways is no good for any sort of crossover. You can watch it all day long and finally catch the break up or down, but it's not the best EMA trading strategy. But so that's 9, 20, 50. If we got any questions on them, we can talk about them. And if not, we will get into the next one. Perfect. Okay, so the next combo we are talking about, excellent for breakouts, excellent for really quick scalps. And then can be a really good one in trends. This is one, or identifying your stop out or take profits or things like that in trends. So this is the 5 and 13 EMA combo. This is kind of a unique one. I've always used it on short time frames, and I've frequently used it looking for crossovers. Because these are very short period, that's what they call it in the world of EMAs. We got the 5 and we got the 13. So this purple line, it is only looking at the last 5 candles. So it's volatile. You can see as soon as it like goes up for a couple candles, this thing just goes sideways, or sells for a couple candles, it sells, buys for a couple candles, it buys. So how I like to use it is crosses. If you get a cross, you buy the pullback on the next candle. Your stop is below the cross candle. So I've alerted trades like this in my tab, obviously not saying it's the 513 because people don't understand how to trade it, but your stop below the cross candle. So it will almost always offer a very, very tight stop. However, because it is such a short period, I will always enter this trade with the plan of it being a scalp. I want to be right or wrong within 1, 2, 3 candles if I can. Yes, sometimes you will end up catching, the reversal of trend from it because it picks up on things very quick. So, it is one that will, on a rare occasion, top or bottom tick that reversal. However, most times when you're getting your first cross of the day, this is something that is going to provide a scalp. And that first cross might actually be hinting at the fact that the trend is about to end and we're going to go sideways for a little bit. And so that is what ultimately happened today. However, this cross, you buy the first pullback or the candle, the pullback on the very next candle, stops, whether mental or hard, very close, anywhere below the cross candle. And what I mean by the cross candle is obviously this candle right here, where those EMAs made the cross. This is another example. You see the cross, so you short the open of this next candle. Your stop on this one above the cross candle. So you're risking, 30 cents upside or so. And that's your stop out. Now, this one gets to be a nice example of showing how to use it to, say, should I stay in this trade? Should I get out of this trade? And what I want you to notice is that we short this. Unfortunately for me, this is where the opening range was, so I would have been all out of this trade if I was in it. But you see the sell candle, you get the cross, you short the top of this one. Well, now we start to see these EMAs expand out a little bit. So we know that the momentum is keeping us down. So the best thing to do is set your stop based on this 13 EMA. That's where you want your hard stop, anywhere above this 13 EMA. Because if we're going to break above that, we're likely going to get some volatility to the upside. If we're going to break below that, we'll likely get volatility to the downside. So you can see you get chopped for a little bit, but you stay well within it and then ultimately get some continued breakdown. It's not always going to be like that. This is even another one where nice sell down. You could have traded, knowing this push up, your entry is the 13, try to be short here, and you're ultimately going to get, if you're still holding, stopped out on this candle. Could you have got a little bit more? Yes. But if you're in same days or anything, this value is likely about equal to this value. So, always trim those positions. And then ultimately, this would have been a hard stop out because you would have ended up losing money up here, ultimately making a bunch, but would have been hard stop out. So that's how I like to use the 5 and 13. Again, it's nice that we have one of these days like we had yesterday to show the issue with this. As I said earlier, short time frames, rife with fake outs. You might think you're getting the cross, think you're getting the cross, think you're getting the cross, get blown out. Get the cross, make a little bit of money, get another cross, ultimately get chopped out of the trade, lose money, crosses here. Maybe you could make a couple bucks right here, but you'll likely get stopped out. Crosses here. you can buy this, maybe make a couple bucks, ultimately get stopped out. And then finally, the one trade of the day that it works well is this cross, short this bounce. So it is always, always, always the most important thing to look at the overall market, take the big picture into consideration, and say, the market is ranging. I am going to quit trying to catch these crossovers. And then wait, until you can see some, like, obviously we were starting to see some pickups in volume, those types of things. Look for reasons to get into the trade as opposed to like just completely sideways below average volume, not where you want to be entering trades. So that's the 5 and 13. Like I said, I mostly like to trade it for crossovers, especially on volatile days, and then use it to tell you how long should I stay in this trade. So we got any questions on that one? Perfect. Okay, next one we're going into, much less commonly used. It's one that I really like. I use it for swing trading mostly. And it is another one that I like to use. It's a longer time frame, and I'm using it as a crossover. And so what I use on this one, and we're actually going to go over these next two we're going to talk about, are both good for swing trading. One is slightly better for your entries on swing trades. The other one is slightly better for keeping you in the trade. And so what we're going to talk about now is the 13 and the 34. And then we're going to use this on these longer time frames, and we're going to treat it similar to how we were treating the 5 and the 13. And we always want to look for, at least for me, I want to look for crossovers. Clear this real quick. I always want to use it looking for crossovers. So when I'm using the 1334, I'm going to start on the 4-hour, and I'm going to try to identify some of these crossovers. And then I'm going to zoom into the 1-hour, and I'm going to try to identify crossovers, because when we can start on the 4-hour. So we get to come back here, we get to come back, we can start on the 4-hour, we can say, okay, we have a cross happening on this day. So I want to be aware, this is where the 4-hour has crossed, but we're now on the 1-hour. So how I use this is, once I've identified the cross, my entry is pullbacks. So that's where we would enter. Obviously you end up getting a really nice gap up, and your stop out now becomes, because we're entering on the hourly, your stop out now becomes an hourly close under that 13 EMA. So you can get a really nice move here. Again, we are still, if we zoom out to the 4-hour, we can stay looking at this 4-hour and say 4-hour has not crossed. So we are still looking to buy dips on this thing. So again, we zoom into that 1-hour chart. We see we have a cross to the, these are EMAs, DG, good question. EMAs, 1334. Again, we see we have a cross to the downside. Well, on this day, we get a cross to the upside. This is unfortunate. This is Apple and its earnings. So, never, ever, ever do TA going into earnings, but this one gets to make it look sweet. Pretending this isn't earnings, we get the cross on the hourly. That's where we now take our entry. Obviously, this one was, ridiculous, doesn't really count. That's where we take our entry, and we know our stop is just any hourly close below there. So if we can pretend this wasn't earnings, it was earnings. Here's our stop out. Does it ultimately run more? Yes. But we're seeing them go sideways. We know we don't want to use EMAs or anything like that. Here is our hourly close. And that's where we stop out of the trade. So it can offer just very, very nice cut and dry analysis for holding trades longer when you look at multiple time frames using it. We can even use it here on SPY. We know back here, SPY got a crossover on those two. So again, zoom into the hourly, and we are looking to buy any sort of dips. I mean, this one got a little touchy. Any sort of dips down into here is where we want to buy, as long as when we look at the 4-hour, we are still crossed positively here. You can see as it starts to go sideways, obviously those things start to get worse. You can even always look at the 4-hour, buy any of these dips down into it and trade off of those. But I like to look at the 4-hour as long as we are, have crossed positive on the 4-hour, and we're only talking positive because we were going up. This works the exact same way on the downside. Then I start to look for my entries on the 1-hour, and I base those stop outs on the 1-hour. So this is for shorter swing trades, 2, 3, 4 days. You're kind of looking for a nice volatile move. They can, of course, end up being longer trades. But I never, I'm the type of trader, I don't want to be the first one in. I don't want to be the last one in. And I don't want to catch the whole move. I just want to catch a chunk of the move, So couple of days, get a couple nice moves up, and then be done with the trade. And look at those 4 hours, zoom into the 1-hour, and trade them that way. So that is 13 and 34. Any questions on that one? Again, pretty cut and dry. Look for the crossovers on the 4-hour, trade the pullbacks on the 1-hour, or I guess I should try to find what's something that's been selling. AMD, it's had a rough go lately. Yeah. We'll see if I got enough days on here. AMD, yeah, and we're gonna have to add a little bit. Let's see. So AMD, we can say back here, we're identifying the crossover on it. We're gonna have to do a slightly longer one of these, 180-day 1-hour. So we've identified crossover on it. We now short, this one's a little rough. You got a couple stop outs, but we short bounces. We short any of this bounce up to it, any of these bounces up to it. None of them pay you great, unfortunately, on this one. That was probably a nice payday. I mean, God, that's a big drop. It's just $5 drop. That was a nice one. Again, we're crossing over. Trend is still down. Trend is still down on the 4-hour. So you still want to be looking to short these bounces. Again, we're above it, so a little risky. Really best trade provided going to be this one. You get your crossover candle, short your next candle. Same thing. And then that 13 becomes your stop out. Even this one could become your stop out if you're catching $10 drops, but look for these crosses on those 4 hours and longer time frames. If I had to choose for scalps, 9 and 20 or 5 and 13, I'm personally going 5 and 13, but I wouldn't say 9 and 20 is wrong. I mean, the 9 EMA on its own, I like. If I was choosing between, like, if I had to just pick one SMA or one EMA, it might just be the 9. But there's something about that 5-13 combo with the crossovers. When you catch a nice one, it can be really, really explosive. So I like to keep my eye on that. And then actually a point that I forgot to point out on the 5 and 13, it's real good on the daily too. It'll show you those strong uptrends really well. I mean, we can actually, I guess I should go back and show it just because we talked about it. So on SPY, and I was, beating the drum on this one for a long time. 5 and 13, this was the this was the 5-13 combo on the daily, which I didn't use a lot until Tilio. He said, oh, you use the 5-13, you ever look at it on the daily? And then the 5-13 combo basically provided support for literally a $110 run on SPY. So can be a very, very powerful tool. Again, a very powerful tool here. Of course, always look where things are bouncing, and always look left. Where are these things? Where are we bouncing? No surprise where we did end up taking the small bounce in today. So always keep your eye on those things. Okay, so next one we're going to talk this is very less common use. This is an old one. Most people don't really talk about it anymore. Even the 5 and 13, most people moved to the 8 and 13 these days, but I like the 5 and 13. But this is one very few people talk about. And it is, when I was talking earlier, we were discussing the one of them is that we were going to talk about is really good for entries. And to me, that's the 1334. It's going to give you the nicer entry. But this next one we're talking is the 12 and the 50. So again, much less commonly used, but it offers a really nice, not only mid time frame, those 15 to hourly time frames, but on the 4-hour daily combo, it can be a really, really strong one. It's going to provide very few trades in the grand scheme of things. Obviously, if we're going sideways, not a lot of help. However, if you go back and you look for this 1250 crossover on longer time frames, it almost always, as long as we have some sort of trend or breakdown, those crosses will almost always provide a very, very nice move. As I said, you don't get them to cross a lot because, when you do, that is saying that like everybody in the last basically 3 months of trading is now underwater when you're making those crosses on those things. And so at least, based on average prices. So frequently the crosses, anywhere they occur, even, I mean, this one to the upside, anywhere they occur are very, very frequently going to give you a strong move. And so this is, again, one that I pair not only on the long daily time frame. I mean, if you're playing across, you buy a couple months of time and you treat that lower 50 EMA on the daily time frame, you treat it as your stop out. There are times where you can catch very, very big runners trading that way. Obviously, you always need to be taking support and resistance into account, but that can be a very, very powerful tool on the crossover. And then again, like I said, on the 15-minute to hourly time frame, playing, and today's just such a wild day, and the previous days were, mostly range days. Let's get back into some real movement. So things like this, you're on that 15-minute time frame, offers a nice breakout, bit of a pullback, your stop's 25 cents below you, no big deal, to catch that move. Well, you've had this nice close here where these have really crossed over, coming out of, selling into a day of consolidation into a nice strong crossover, can be a sign of a breakout. That again, you get to catch this very nice ride up. I'm not saying that you should ever swing SPY calls that are, $10 in the money and you're printing, but when you do find those crosses, you can get a very nice move. However, when you're looking at the 15, when you're looking at the hourly, when things start to go sideways, that's when it's time to exit. Did we break out more? Yes. But when things start to go sideways is when, your contracts are going to start being, like they're going to be worth less here than they are here, even though you're at the same price. Once that starts happening, that's when it's time to exit the trade. And so that's how I personally use the 12 and the 50. In all honesty, I mostly use it on the longer time frames. As I said, out there on that daily time frame, when you do identify those crosses of crazy things happening, it will very frequently provide a nice move. We can obviously see here, this cross happened and then went straight sideways. And yes, you could have made money on these shorts right here without a doubt, but you need to be, as I've said, aware of what the market is doing. And if you're seeing these things just flatten, you want to be careful even shorting this bounce, because really the market is telling you that it's about to consolidate a little bit. And so always be careful when you're seeing EMAs or SMAs start to go flat. That likely means that volatility is going to be disappearing for a little bit. And again, you will miss some trades because on those daily time frames, this daily candle has to print for this portion of the EMAs to print. So this cross, you're actually going to identify as real on this candle. And at that point, you're, I mean, God, you're $8 above the cross. So it's not offering a great entry. You want to start to look for those, bounces and pullbacks to these lows to be getting long again. But that's the 12 and the 50. As I said, I mostly use it on the longer time frames, but very powerful tool on the short ones as well. And so final, oh no, I forgot. We're gonna do Assassin's Cloud too. But the last one that I want to talk about, this is something that I picked up from Al Brooks. It's something that I really hope everybody uses. It's a very simple tool, ugly on the chart, unfortunately. But It's something I talk about in my tab all the time. There's a few people in here who are using it all the time. 1K uses it, Sushi uses it, a bunch of people use it. And so this is a study that I got from Toasty. And I have it pinned, I believe, in my tab. And so what I'm doing here on this, the little pop out here, it's the multi-time frame moving average. And so you guys can't see it, but if you click on this little wheel, you can set, do you want the hourly? Do you want SMA or EMA? And how long do you want? And so what I have here is the hourly 20 EMA, which it's insane. I mean, it is just an unbelievable tool. Not only scalping, but day trades, all of those things. And then to me, it is one of the best things you can use to set your bias. And so why this study is nice is it pops up on a shorter time frame. So this ugly yellow stair-steppy line is the hourly 20 EMA displayed on the 5-minute chart. You can put it on the 15-minute chart, whatever you want, but that's it displayed on the 5-minute chart. And so we know that this tells us that anybody in the last 20 hours, basically the last day, are they making money long or are they making money short? If we're below it, that means everybody in the last day who's long is now red on their longs, and everybody is now, who is short is now green on their shorts. So it's a great tool for us to know that shorter time market sentiment. And so how I use it, I frequently will use it in combination with VWAP. I think the VWAP, and we might as well just pull it up. I think VWAP matched with the hourly 20 is one of the greatest things you can use for identifying bias. If we have VWAP right here, if we're crossing below them and our candles are below the hourly 20 and below VWAP, short the bounces. It's that simple. If on the other side of it, let's see if we have a nice day, our candles are closing above the hourly 20, closing above VWAP, buy the pullbacks, buy all of these pullbacks, because the market is telling us, based on volume, the average price, we're trading above it, means bulls are making money. And in the last 20 hours, bulls are making money and bears are not. So for us, it gives us a very, very easy way to just look at the market and say, do I want to look to buy dips or do I want to look to short rips? It's that simple. The other side of it is when you get, big breakdowns like this, then you can look to short these, and maybe say, oh, I'll stop out on a 15-minute close and get those rejections. Let's see if we can find some nice, most of these are just breakthroughs. So now you short the pops. But the bounces on it, again, can be a really, really awesome one. Of course, not in sideways markets, as always, they're never going to be the best thing. Oh, but this is actually a pretty nice example of sideways right around both of them. We got, candles selling below, candles being bought above, and both VWAP and 20. And then we do it again for the whole next day. And then we come into this third day and start to see a cross, and for the first time, an actual move up in momentum. And that is when you can use these things to start to trade the breakout and say, okay, I think the market is shifting structure. We're going to go up now. And then that hourly 20 can become your stop out. You stop out when we finally pull back below it. So really, really powerful combo, 20 EMA, hourly 20 EMA, and VWAP. I talk about it all the time. Many times intraday, it'll provide like even candles like this where, you aren't going to get a ton of money, but you're going to get a 40-cent pop in one candle as they try to break this. And then as soon as we're below it, short it. You can even do pullback here, scalp these calls. Right here, short it again, stops above. So it can be powerful sideways, but you need to treat them as scalps, not as day trades or anything like that. And so for me, that is just, my absolute favorite, it is my absolute favorite intraday by as helpful, will almost always be a big line in the sand. If we're below it, short those things. If we're above it, long all dips, until it doesn't work. That's simple. Just like all things, hammer it as long as it's working. And the second it stops working, get out of the trade. But here, short it, short it, short it, short it over and over, worked out pretty dang well for you. Okay, and so that is the hourly 20. And then the last one we're going to talk about, shout out Gail. So assassin, a lot of people like these Ripster clouds or whatever. I can't stand Ripster. Guy's fake, charges a lot for those things, does not care about his friends. And so I'm doing the wrong one. Assassin cloud. So the assassin cloud study, you can see super simple. It's based on a couple of EMAs. You can, change the colors of the EMAs you want. You can change the length that you want. 60 is obviously that's going to be that 1 minute chart. And so if you, say you want the 5 minute ribbon, you're going to enter 12 because, that's how many there is. So it is just the combo that this guy has going on there. And I mean, the 1 minute's really powerful. Obviously, you want to typically, well, you can also make it the hourly ribbon on your chart, but it's going to do a lot of sideways stuff, But this to me is the best EMA cloud I've ever seen. A lot of people have these ones, they turn like green to red and stuff, and they're just stuffed with fake outs. And I hate that. Like I hate colored things, if you know what I'm saying. Because like your EMA clouds are red, and then you're flipping green, and then you get smoked. Or you come down here, you're flipping red, and you get smoked. I don't like that color change and stuff. As I said, EMAs, SMAs, they're just, think of them as support and resistance. You can short this or EMA and then stops above it. Short these breaks below, stops above it. That's simple. And it is just, to me, it's one of the best clouds I've ever seen. It picks up chop when it's starting to come real fast. I love how it gets wider, showing you that, hey, like we're getting momentum. You of course don't know exactly which way it's going to go ever, but we're getting momentum. We're, picking up some steam here. And then as they both really start to point up, I mean, it tells you great entries. Your stops will be the other side of here. And then if you run this thing all the way up, you can either say close below there, close below there. You're going to end up stopping at one of these two places and, catch that nice move off of there. These are awesome. I'm 90% sure that Assassin has shared them in here before, but he is my good buddy. I'll actually send him a message if I can find it. I'll send him a message right now. And I'll ask him if I'm allowed to share them, and I'll just pin it in my tab. To me, it's the greatest clouds around. 1 second. To me, it's the greatest clouds around. He's active in here. If anybody's seen it, he's like the algo guy. He has like, I mean, he's the man with the plan. His stuff's insane. I can't keep up with all of it, but this cloud study is one of the greatest clouds that I've ever seen. And so it's a great one. If anybody wants to use it, I'll try to get it pinned in my tab. And with that, do we got any questions? Can I run on demand to see how it works? I mean, yeah, but it won't be fast enough. You know what I'm saying? Oh, and actually I can't right now because I think it'll end the stream. We going up or down tomorrow? Shoot, man. Well, I mean, my 528 calls hope we're going up. I'll tell you that much. That's all I know. So hoping we're going up. What are these features folks doing? What do you guys all think? What are we doing tomorrow? We're a little early. Tiny attendance to a day. What do you all think? Anybody looking at any trades? We got a few more minutes, 4 more minutes to answer any questions or anything like that. Ooh, look at that. Those features guys are getting us above it. Got to keep this, got to get it up. Yeah, I know. I'm laughing at all the people who are like, oh yeah, May's bearish. And then I'm like, oh, have you guys looked at any of the like long time frame charts? They're pretty good. This one's we're printing a pretty wild monthly candle. But imagine being bearish on this. I'm sorry, but like That's a pretty bullish candle. That's a pretty bullish candle on the monthly. We'll see how it finishes. As I said, don't analyze them. We got a week left, but so far, you know, sell in May and go play, sell in May and go away, whatever you want to say, has turned into, man, buy the market, just hammer the ask. Yeah, market is closed Monday for anybody who doesn't know, Memorial Day weekend. More importantly, my birthday is on Saturday or Sunday. I hope you guys all got me presents. I'll be expecting them. I'll hold you to it. But yeah, what's everybody thinking? Friday tomorrow, gotta be honest. We'll see. Like Lambos is telling us, heading into the weekend, it could either be really, really boring or really, really fun tomorrow. We'll just have to see how it ends up playing out for us. Nice, you got those Al Brooks books? Happy for you. It's wild. It's the most informative price action information available to anybody. Right on. Thank you, Richie. What Al Brooks books do I recommend? I mean, it depends what you're trying to do. I think that the two most crucial ones are trends and ranges. However, if you really want to get into the deep, heavy, lot of talking, lot of information, bar by bar, I mean, uh, you know, any like what he does in bar by bar, if you could somehow read that thing and memorize his book, you would be like the most successful trader on the planet. The issue with Al Brooks is, for anybody that is trying to get into him, he is boring and he is technical, and like he's just no bullshit. He talks about the market. And so, these days people like those like loud Twitter gurus and like the loudest people around and the ones who like talk like they're the best. But to me, I'm just a pretty big believer in, being humble and trying to teach about what you know. And so if you're into like really boring old dudes just talking about some stuff they've seen over the years, check out Al Brooks. He's the best of the best, in my opinion. Microsoft, let's check it out. Thing's been just a beast, huh? Look at that. What a run. Where is that trend at? It's kind of looking like it broke it if I ooh, ooh, holding on. Holding on by a sliver, huh? Look at that. Man, tricky. Tricky spot for Microsoft. I'd love a dip down to like 420. That'd be a sweet sell on Microsoft. A lot of junk though. I mean, this range right here will really make selling tough. There's just a lot, like, there's a lot of orders still hanging out around here. So you got to believe that selling down is going to be hard. Buying up is going to be the path of least resistance. Well, yeah, yeah, the daily candle is bearish on everything today, I mean, the daily candle is bearish on everything today. Nobody knows why, you know, and so yeah, the candle is bearish on everything today. But still, if you like zoom out and start looking at a lot of these weekly candles, like, yeah, I mean, the bulls have given some up, hasn't printed yet. We got to see how this thing closes. We're still sitting above average volume on a lot of things heading into Friday. And so we just got to see how some of these things close. But no denying that there's a ton of bearish candles around today. This one, whew, like that, well, there's bearish, giving up trend, giving up everything. But if you start to pull up a lot of these charts, almost like, and not saying that like we're gonna bounce here, we're gonna fly. I mean, to me, the risk was swinging short. I swung long personally, but when I see something like this, and there's a lot of stuff like this lining up in the market. I mean, even on SPY and QQQ, big pushes up, pulls back to support. We have a lot of things that sold directly into exactly where they like should have stopped. I mean, like we even talked about this SPY one earlier. I mean, you can't make that up. These guys are good, and so to me, like, everybody's looking for this gap fill, and I'm sort of like, well, what about support? That's just what I'd look for. Like, I mean, it's pretty like we've obviously bounced support thus far. So I'm not swinging short down here. I'm for sure not swinging short on the hopes of a gap fill. Because to me, we're like, you always like one bearish candle is one thing, but as always, zoom out to these longer time frames and like, does this look like a short the rip or a buy the dip market? Because to me, it looks like a buy the dip market still. I'm not saying anybody should have been swinging long off of a day like this, but to me, that's where the reward lied personally. Okay, that's 6 o'clock. I see a few of you trickling out of here. Thank you so much for being here. Assassin messaged me that he is more than happy to have me share that study, so I'll get it posted in my tab for all of you. Oh yeah, Gail, I see you're asking about the gap too. Yeah, and I should say, okay, tomorrow, here's my line in the sand. If we break this, like, yep, I'm short, trying to fill the gap. Not much gap left, but yeah, I'm short, trying to fill the gap without a doubt. But I'm only short down to about 523.30, where again, I am attempting to buy the dip, Yeah, thank all of you. Thank you so much for being here. And if that's going to do it, we will call it a night. Thank you, everybody, so much. It was great to have you. As always, if you got any questions, feel free to hit the DMs and I'll try to answer them if I can. And thank you all so much. We will catch you tomorrow, Friday. Trade safe.